Another topic that we get asked a lot about is this idea of build versus buy. And, my point of view on it is if you're a traditional incumbent and you're looking at creating a new disruptive business, it's not really build versus buy, although it's something you should analyze. It's most likely build and buy. And so let's talk about how you can kind of think about these different approaches and kind of the hybrid of the two, right? So typically when you're looking at a build from scratch approach, right, you're going to say, hey, I'm going to go, there's a new business opportunity here. It could be cannibalistic to my core business. I need to do this thing separate and away from my core business, give it some space, give it some autonomy. Maybe you have like a labs or an incubator or some kind of disruptive group, or maybe you just give, a team very little time and very little money to try and go hack some stuff together and prove out the new business case, right? I think you got to do those hacks. You got to have a team internally looking at this and building the business case, irrespective of which path you go. You need to get that market validation on your own with your people on the ground to really get those learnings. I think the question is build versus buy, or build and buy, is when you think about really trying to scale the business. And that's where I think most large traditional incumbents run into issues, right? If you're really going to do something disruptive, if you're really going to do a new digitally driven business model, whether it's a platform or not, and you've got a large, let's say, multi-billion-dollar company, you need the CEO involved to make that initiative successful, right? If you want to be able to tap into the intrinsic strategic advantages locked up inside the core business, and then the whole thesis to go do this new digital spin out company is that you have competitive advantages inside the core business, and by putting these two things together, you can now be successful in this new digital business. In order to get access to those assets in the traditional business, CEO has to be involved. Otherwise, there's just too many competing factions. It's not that these people are bad or are ill or have any ill will against. It's just everyone is so busy and they have their existing initiatives that in order to cut through that and to prioritize it and to extract that value and make it available to the new separate entity, you got to have the CEO involved. And for this to be interesting to the CEO, to deserve a 30-minute slot on a weekly basis on the CEO's calendar, it's got to get big, and it's got to get big in 2 to 3 years. And in order for the CEO to agree to that and for the board to agree to that, you've got to be able to have some way to look at a timeline for break even. How do I get to scale in a 2 to 3 year period of time? And how do I have some level of comfort or confidence in when this thing could break even? Okay. Now, knowing that you need to solve for those variables, how do you evaluate build versus buy or build and buy, right? There's going to be building in any approach. Unless you're trying to do something completely separate from the core business that doesn't rely on any unlocking of intrinsic strategic assets from the core business and opening them up to the separate entity, okay, then you can disregard a lot of what I said, right? But assuming you do want to tap into that, which would be the prudent thing to do, right? How do you get some you need every competitive advantage you can in order to do new businesses, or any business for that matter. There's going to be some stuff that you have to build from scratch in any scenario. The question is, can you really go build the whole business from scratch? Do you have the team to do it, that are entrepreneurial, that want to say goodbye to their existing comp structure and comfort in that comp structure and really go forge something new? Do you have the team in place? Do you have the ability to get to scale in a 2 to 3 year period of time? Use that as your barometer. Some companies that have incubated businesses that do share a totally built from scratch model, but are from a traditional business would be what IAC did with Tinder. Tinder makes sense for IAC because they own Match.com and they own these kinds of dating websites, and they've owned them more for desktop internet, right? But for Tinder, that really didn't tap into any of the traditional assets of the Match group. It was incubated by IAC and then is rolled up underneath Match, and now they're looking at spinning things off and this kind of stuff. But the timeline for Tinder to get to scale, again, it was much longer than a 2 to 3 year period of time. Tinder was officially started in 2012, and it was I think it was actually incubated and kind of in secret a little bit before that. So unless you have a longer timeline, I think maybe 3 to 5 years to get to scale, and the executive team is comfortable doing that on that timeline, then I think that makes sense to go the build path. The other thing is, if there are no other, if you're very early on in the market, right? Like Tinder was very early on in terms of the number of dating apps in the space, right? So are there other tech startups already doing this or kind of doing this that could be viewed as a partner, invest, or acquisition target? If the answer is no, well, then you're kind of only left with the build from scratch option. And the assumption is that you want to validate that there is demand, that you're not too early, right? Because if there are no other tech startups, that would be the first question that comes to mind for me. Well, why is no one else doing this? What am I missing here, right? So if you can answer all those things and you can prove that there is interest on the demand or supply side or both, and then you have a longer timeline than say 2 to 3 years, and the executive team or the board or whoever needs to sign off on this is okay with investing, at least $5 to $10 million a year in an initiative like this. Okay. That seems directionally making sense to me to go purely build from scratch. If there are other tech startups that are out there that have a head start, or you're trying to do a platform business, but there's linear tech companies out there that could help you bring some product functionality, help you solve for demand or supply or both, then I would implore you to really evaluate looking at partner, invest, or acquisition paths. Because by looking at these tech startups, what do you get from that? Well, you get a team that's already in the industry, that already understands the industry and has passion. You get a team that is comfortable with the risk reward variability that comes with doing a startup, as opposed to finding and sourcing that team of entrepreneurs from within the company that do want to let go of that comfort level with nothing more than an idea, or with not much validation, right? That's hard to find. You get that in a startup. You get some existing product. You get to see their traction. You kind of get to try before you buy, right? And you can then help to accelerate your journey with their technology, with their demand, with their supply, or both, and help figure out how to put those things together with the core assets inside of the company. So it's purely a buy, invest, or partner option in terms of the build versus buy. If you're not trying to tie in any intrinsic assets of the core business and supercharge this separate entity, right? If you're purely just trying to find what are ways that I can use other technology to incrementally improve my core business, that's a very different solve, right? Than saying, I want to go create a separate digital platform entity. And how do I get there? That's going to be build and buy, right? If it's just how do I incrementally improve the existing, that could be a buy, partner, invest. And you don't really need to have any kind of substantial internal build out beyond what your existing product teams are already doing. Does that make sense? If you do want to try and do a completely new business from scratch and build it from scratch, and you have the parameters that I'm talking about, then you could do that. But if you want to go do a new business from scratch on a more accelerated timeline, say 2 to 3 year timeline, and help solve for a number of these things that to get you there faster with a higher degree of confidence, with a break-even point that's more realistic and faster, then I think you look at a build and buy approach. And that is a matter of kind of putting both of these things together. How do I put the assets inside of the core business, build that, expose them, and layer them into this separate entity that I'm either doing an initial partnership or investment in, or maybe I'm buying it outright, or just setting myself up to buy it outright if those initial tests or partnerships or investments go well. I now set myself up to go and buy that company in full. So that's some of how I'd break down thinking about build versus buy versus build and buy. And how to think about sequencing those different models. Hi, this is Alex from Winner Take All. Thanks for joining us. Hope you enjoyed the content. Feel free to leave a comment, ask us questions, and definitely make sure to join us on our next live stream.